Hi, and welcome to the Travelex Weekly Outlook. The dollar started the week of July 19th on mixed footing against its major rivals. We did see the dollar soften a touch against the euro, but the dollar is up off a 7-month low against the Japanese yen. We saw the single currency turn in a pretty resilient performance on Monday. Saw the euro hold close to that 2-month high against the dollar. That was despite news that Moody's had downgraded Ireland's debt rating by a notch. Initially, that weighed on the single currency. We did see that fall broadly on concerns or renewed concerns about debt in the bloc's financial sector. However, the single currency really rebounded a bit against most of its major rivals, and that's as Friday's release of European bank stress tests. That's really helping to overshadow the concerns about the downgrade. Those stress test results, they're expected to really allay fears about the continent's debt crisis, and so that is providing some support to the single currency. Last week, we saw the dollar's broad downtrend continue. After early July, we did see or early June, the dollar had strengthened to a 4-year high against the euro. But since then, we've seen the dollar really kind of scale back some of its appreciation. And the main concern really is renewed worries about the pace of recovery in the U.S. The data out last week really supported the notion that of a slower pace of recovery. We saw that retail sales, those surprised to the downside. We also saw that consumer sentiment, that fell to an 11-month low. So that is the type of data that really weighs on the outlook for the U.S. economy, particularly the data on consumer sentiment falling to a near 1-year low. Keep in mind that consumers, they really tend to speak volumes on the recovery since they're the main driver of U.S. economic activity. Another reason pressuring the dollar has been was the Fed's minutes from its June meeting. We did see that the U.S. Central Bank really stood ready to offer additional support to the recovery in the event that it shows signs of worsening. Of course, the prospect of a slower pace of recovery and the fact that the Fed stands ready to support the economy, that's all inherently dollar negative, as that really reinforces the outlook for low rates in the U.S. Another factor behind the dollar's recent downward trend has been really fading concerns about Europe's debt crisis. Last week we saw nations like Greece and Spain, they held government debt auctions, and those went fairly well, and so that helped to allay concerns about the banking sector. And of course that had been at the heart of the euro's broad downtrend that we had seen over the past few months, really the better part of this year. So that helped to ease concerns about the debt crisis going on in the Eurozone. But despite the dollar's broadly weaker trend against its European and Japanese rivals, we did see the dollar fare better against some of the commodity-based currencies such as the Aussie dollar and the Canadian dollar. And that's really on the more darker outlook for the global economy. Keep in mind those currencies are really sensitive to signs of a pullback in economic growth, not only with the U.S. recovery showing signs of stalling. China, that happens to be Australia's largest trading partner, they're expected to turn in a slower pace of growth during the second half of this year, and so that is really weighing on the more growth-sensitive currencies. Some of the highlights for the week of July 19th, Fed Chairman Bernanke speaks on Wednesday and Thursday. We also have housing data due out on Tuesday and Thursday. And then, of course, one of the highlights for the week will be the European bank stress tests that are due out on Friday. Any negative surprises would tend to pressure the single currency and renew pressure on the euro. The Bank of Canada also meets on Tuesday. They're seeing boosting interest rates by 1/4 point up to 0.75%. That is all we have for this week. For the latest on the dollar, please be sure and check us out online.